When your portfolio is green, it feels like skill. When it's red, somehow it's the market's fault. Sound familiar? And honestly, that double standard is the hardest habit to break. But here's a strange test that can actually tell you whether skill exists in a game. Try to lose on purpose. That idea comes from a book I picked up recently, a Korean bestseller called The Investing Mind, written by a fund manager here in Seoul. It's never been translated into English, so consider this your inside look. The author isn't handing out stock picks. His argument is that investing breaks down in the mind, long before it breaks down in the numbers. In this episode, we'll cover 3 ideas: the losing on purpose test, why your brain sabotages you, and the one type of error you should actually fear. First, can you lose on purpose? If you want to know whether a game involves skill, ask this question: can I lose this game on purpose? In chess, absolutely. That means skill exists. At a roulette table, you can't even lose on demand. That's pure luck. So where does the stock market sit? Here's the uncomfortable part. In the short run, you can't even lose on purpose reliably. The stock you dump might rally, the stock you buy might tank, which means short-term returns are carrying a lot more luck than we'd like to admit. And that leads to what the author calls the one guaranteed way to fail: gaining experience without learning from it. You can trade for 10 years, but without a feedback loop. That's not 10 years of experience. That's 1 year of experience, repeated 10 times. Second, it's not your fault. Blame evolution. Why don't we learn? The author says, blame your brain. When your brain spots a pattern, it releases dopamine. And dopamine's job is to crank up your confidence in that pattern. The catch? Your brain never checks whether the pattern is real or random. This is why beginner's luck is actually a curse. Your first stock happens to go up, your brain decides your method works, confirmation bias locks in, and you size up the next bet. Then the market sends you the tuition bill with interest. The book leans on Daniel Kahneman here, the psychologist behind thinking, fast and slow. The deliberate, rational part of your mind, System 2, is far weaker than we believe. Most decisions are driven by the fast, unconscious System 1, that finger smashing the sell button in a crash. That's System 1 at the wheel. Third, 2 kinds of errors, and which one actually kills you. This was my biggest takeaway. There are 2 kinds of mistakes in investing. A Type 1 error is doing what you shouldn't have done. You bought and it dropped. A Type 2 error is not doing what you should have done. You passed and it soared. Yes, that second one is what we all know as FOMO. Missed gains hurt more, psychologically, far more. But the author's conclusion goes the other way. Survival depends on cutting Type 1 errors. A missed rally never touches your account. A bad purchase destroys actual capital. The good news is that markets give you a dial that life rarely does. You can control the blast radius of a Type 1 error through position sizing, make small, limited mistakes, collect the lessons, and let the quality of your decisions compound. One line sums it up: be cautious when you invest, be bold when you cut risk. Quick recap. Skill exists only where you can lose on purpose. Your brain is a confirmation bias machine by design, and the error to fear isn't missing out. It's the bad trade you actually make. So how do you keep emotion out of the driver's seat? The author's answer is almost insultingly simple: write it down. But there's a trap. Writing "this stock will double" teaches you absolutely nothing, no matter how many times you write it. What exactly turns a note into skill? That's where the next episode picks up. See you there. This video isn't a word-for-word retelling of the book. It blends my own decision-making experience with the author's ideas. If you want to actually build that error-spotting instinct yourself, I genuinely recommend reading the book. This is not investment advice. This video is for review and commentary purposes only.